Welcome, and thank you for joining me on this information session about why I joined NEXA Mortgage and why I am here to promote the company to you. My name is Stewart Brown. I'm a mortgage loan originator here at NEXA Mortgage, and this video is primarily intended for existing loan officers that are considering joining our company, but it is also intended for people who may be new to the industry and are looking to get their start with a strong, established leader. I will cover in this presentation why there is no other better career opportunity in the mortgage industry today than there is at NEXA Mortgage. You will learn every aspect of what NEXA Mortgage has to offer for the right mortgage professional. And to give you a little background, NEXA Mortgage is the largest full-service mortgage broker in the entire United States. NEXA Mortgage LLC was founded by Mike Cordes and Matt Grella in 2017 and is headquartered in Chandler, Arizona, and is licensed in 48 states, Washington, D.C., Puerto Rico, and the U.S. Virgin Islands. The only states we are not yet licensed in are Massachusetts and New York. And to date, over 2,000 loan officers have joined forces with NEXA, and after you finish watching this video, you will understand why. In an effort to make best use of our time together, I have created the following outline for you. This video should take about a half hour, in which time I will go not only wide into what NEXA is about, but I will also go deep into what NEXA is about. At the conclusion of this presentation, if there is anything that you are still unsure about or have questions on, you can reach out to me directly. You can also contact me if at the end of this presentation you are ready to begin your journey with NEXA. I will be able to help you get the onboarding process started and make sure you are fully up and running so you are in a position to make money from day one. I can be reached in a number of different ways, either by phone at area code 215-317-6295, email at sbrownjr@nexamortgage.com, or by visiting my website and reaching out to me via my Calendly link, through the Book an Appointment tab, or my consultation link at www.stewartbrownjr.com. Before I begin, I want to talk about the type of loan officer that would be a good fit for NEXA, and also the type of loan officer that would not be a good fit. Let me begin with the type of loan officer that NEXA will not be a good fit for. And that is a loan officer that is not self-sourcing and requires leads be provided to them. In addition, if you are a loan officer who is just looking for a place to hang their NMLS license, or perhaps you only intend to originate one or two loans here and there, then NEXA is not the right place for you. If you currently work for a company that provides leads to you and you wish to make a move to another company that continues to provide leads and directs your day-to-day activities, then NEXA is definitely not the place for you. NEXA does not provide any leads to their loan officers. However, if you are willing to self-produce and generate your own business, then NEXA could be the place for you. If you are a goal-oriented individual and want to take your mortgage career to the next level, month after month, quarter after quarter, and year after year, then NEXA will be a mortgage paradise for you. Therefore, loan officers that thrive at NEXA do two things. One, they generate their own business. And two, they are independent business owners who make all the key decisions and are essentially responsible for their own success or failure. If you are looking for a company that will guide you and tell you every move to make, then NEXA is not the place for you. NEXA wants loan officers who are purely entrepreneurial. Therefore, from day one, you are given the freedom to make important choices and decisions about how to run and operate your business. As long as you are profitable and compliant, you are able to operate your business in the way that best suits you. So here is what I have for you today, and these are the topics that I will be covering. First, I will start with interest rates, which typically is the item that is most important to our clients. Second, I'll be covering compensation, which is typically the topic that is most important to you. Third, I'll go over our lenders, including their products and turn times. Next, I will be showing you how to set yourself up from a tax perspective after joining. Then I'll be reviewing sales and marketing, followed by processing and underwriting, general support, and benefits. Lastly, I will touch on some of the most commonly asked questions. And throughout this entire presentation, the message I want to convey to you is what is shown at the top of this first slide. And that is, we view you as a partner and you are in control of your business. As I continue through this presentation, please allow this message to resonate with you. So let's start with interest rates. The great news for loan officers that work for us is that no matter what the interest rate environment currently looks like, we are at a fundamental advantage over loan officers that work for retail lenders, including banks and credit unions or correspondent lenders. The first fundamental advantage NEXA has is margins on interest rates. Let's start by comparing what retail lenders are able to do versus what we are not able to do. On the retail side, there is no cap on the amount of margin that a branch can make on a loan. So if a branch is able to profit off of a customer and stuff their interest rates with, say, 500 basis points or even more, and the customer accepts the terms, the branch is fully permitted to get away with this. NEXA is different. We are a mortgage broker and are capped by law on our margins to 275 basis points. Therefore, because we have caps on our margins, it allows us to have much better pricing. The second fundamental advantage we have is also in regards to margins, and more specifically, bifurcated margins. This just means that there are two separate markets, or one for conventional loans and one for government loans, including your FHA, VA, and USDA. Retail lenders are permitted to have bifurcated margins, and what this means is that they will typically price more aggressively on their conventional loans, usually somewhere between 300 to 400 basis points. On government loans, they will typically price between 350 to 550 basis points, sometimes even higher. Therefore, loan officers at retail lenders are controlled by their branch's P&L and need to request a pricing exception that typically requires the approval of several layers of management in order to be competitive, whereas our loan officers have complete control over their margins on every single deal we do. At NEXA, our loan officers utilize one of two pricing engines and aggregator tools. Lender Price is available to all loan originators at NEXA and comes packaged as part of your origination software. We also have a paid option that offers more functionality and a wider selection of lenders called Loan Sifter, which is an Optimal Blue product. With both of these tools, you will have the ability to save each search scenario so you can easily come back to it later if you need to. This leads us into a big difference between retail loan originators and mortgage brokers. NEXA's loan officers, as mortgage brokers, are able to price their loans in one of two ways. The standard way is lender paid compensation, or LPC. With the lender-paid compensation way of pricing, the margin is already being built into the interest rate and points when the results are generated. The alternative way is borrower-paid compensation, or BPC. The awesome thing about borrower-paid compensation is that it allows you on each of your deals, if you need to adjust the margin to reduce the applicable points per interest rate, and this is completely compliant. So this truly is why we have the best rates in the entire market. Another advantage we have is the ability to waive the underwriting fee for the borrower and automatically include this adjustment in the interest rate and associated points. Therefore, it is common practice that we will typically waive this fee. So let me further elaborate on what you can do with borrower-paid compensation. For example, if your client needs a lower interest rate and you need to reduce the discount points because of either a DTI issue or cash short to close, you can reduce the margin by switching from the standard LPC model to borrower-paid compensation. Or, if you need to match the terms on another lender's proposal so as not to lose the deal, you can reduce your margin as well with borrower-paid compensation. So that's a general overview of our pricing engines and the different pricing models available to brokers. Now we will segue into our next topic, which is compensation. Next, we will look at compensation. At NEXA, you can receive compensation in one of the following ways, including base commission, bonus commission, and residual income. This first chart is for our base commission and also our bonus commission. Looking at the first column, as I mentioned earlier, is our margin. So 275 basis points is the maximum margin we can make on most of our loans. And when I say most, there are several other types of loans, such as reverse mortgages, commercial loans, and certain investor products where we are allowed to make more than 275 basis points, but 275 is the cap on the vast majority of loan products. The next two columns on this chart breaks out the funded loan volume in a calendar month. The first of these columns is applicable to your calendar month fundings from 0 to under $3 million. So, if the margin on your loan is 275, you will earn 220 basis points of that 275 for anything under $3 million. Now, as you look at these numbers, you might notice what appears to be a discrepancy at first glance. So let me explain how this works. There is a formula involved. First, on every loan, 25 basis points is taken off the total, and this goes to NEXA to cover corporate operations, including payroll, human resources, accounting, licensing, and legal. This fee is spread among these different departments in order to support you from a corporate level. Next, there is a 12% profit margin that is applied to the remaining basis points, and that portion goes to the owners of the company, Mike Cordes and Matt Grella, for their compensation. Therefore, let's look at and calculate a couple examples. First, assume 275 basis points. Reduced by 25 basis points leaves 250. Next, we multiply the 250 by 12%, which gives us 30 basis points. We then subtract the 30 basis points from the 250 to arrive at 220. Next, let's take a look at it receiving a margin on a loan of 200 basis points. 200 basis points less 25 equals 175. 175 basis points multiplied by 12% is 21. 175 less 21 equals 154 basis points. Taking a hypothetical loan of $500,000 with a 275 basis point margin, we would see NEXA's total compensation of $13,750. 1,250 or 25 basis points would go to corporate operating expenses. Then 12% of the remaining, or $1,500, would go to the company founders, and the remaining 220 basis points, or $11,000, would go to you. Now, the great thing is, in any given calendar month, if your funded loans exceed $3 million, any amount of $3 million and higher will go 100% to you. Another important thing to remember is that NEXA does not charge a per file fee on funded loans like several other mortgage brokers do. The next type of compensation is optional, and this is our residual income. This type of compensation is for those that want to help NEXA, the company, grow and also grow your own business. So here we have our NEXA partnership plans. So let me explain what this actually means. The first level is associate partner, and this is someone who helps the company grow by 10 producing loan officers. A producing loan officer is defined as someone who closes at least one loan in a calendar month. So after you would bring on 10 producing LOs, NEXA will then do two things for you. First, they will pay you 10 basis points on every loan that each of these loan officers close. Then they will lower your bonus commission threshold down from $3 million to $2 million. Therefore, for each loan you close over $2 million, you will now receive 100% commission versus waiting until you receive $3 million. Then we look at a senior partner. Here, after you bring in 15 producing loan officers, NEXA would pay you 10 basis points on every loan they close, and then lower your bonus commission structure again even further down to $1 million. So once again, instead of waiting until your funded loans each month reach $3 million, now you start receiving 100% of your commission after just $1 million funded loans in a calendar month. And finally, we have our executive partnership level. At this level, after you help the company grow by recruiting 20 producing loan officers who close at least one loan a month, you now get 100% commission on every single loan that you close. So then you may ask, how does NEXA make any money off of an executive partner? Well, it's very simple. They don't. And the reason for that is this level of partner has helped NEXA grow by bringing in a significant number of producing loan officers, 20 or more, and they should be compensated for that. So you may ask, what if I only bring in one producing LO and not 10 or more? In that case, you immediately start receiving 10 basis points on your recruit's loan volume. However, you won't see the change in your bonus commission structure until you've hit the required 10, 15, or 20 loan officer recruit levels. As a reminder, this type of compensation is supplementary to your production earnings, and this is completely optional. We are simply giving you an additional way to make money above and beyond your normal commissions. However, most of our loan officers simply produce and are well compensated that way. However, if you enjoy making new connections in the mortgage industry or have colleagues in the field that may benefit from joining us, this could be an excellent opportunity for you. NEXA continues to improve their compensation plan, and there have been numerous adjustments, and each time it just gets more and more favorable. Next, let's look at our lenders. Currently, we work with and have over 200 different lenders on our platform that we can send our client scenarios to. When we look at this next slide, we can tell you that because of this huge selection, we will always have three things. 1, great rates, 2, fast turn times, and 3, the most products. To these 200 plus lenders, we are the client, and this relationship creates power on our side and an environment where they must be competitive in order to get and retain our business. Therefore, we have better pricing than any other broker in the nation because of our size and volume. In addition, these lenders are constantly competing for our business and attention by running pricing promotions and offering incentives. Our loan officers have complete control over what lender they want to use and to send their deals to. You are always able to ask a lender to match a price from a competitor. However, if their pricing gets out of line compared to the overall market, you can simply stop using them and use one of our other lending options. Next, we achieve faster turn times by moving around from lender to lender whenever situations change or circumstances warrant it. Whether that's a reduction in their underwriting staff or they have people who are sick or on vacation. On the retail side, however, if your company has layoffs, you have no choice but to inform your client and realtor partners that there will be a delay in your transaction. With NEXA, that is not the case. We have more loan programs than anyone in the country can offer. And just to name a few, we have all the standard programs, including conventional, FHA, VA, and USDA. We have lenders with minimal or no overlays. We have lenders that can do manual underwrites and TBD underwrites. We have jumbo, super jumbo, renovation loans, temporary buy downs, HELOCs, HELoans, piggybacks, land lot loans, one-time closed construction loans, commercial, non-QM, DSCR, bridge, hard money, fix and flips, non-warrantable condos, no FICO, interest only, 40-year terms, HUD 184, condo tells, DACA, foreign nationals, ITIN, bank statements, asset depletion, down payment assistance, you name it, we got it, and more. Now, let's talk about the different ways to be set up from a tax perspective. On the broker side, in 40 states, you have the ability to be set up as a 1099 independent contractor. Therefore, in most states, you will have the opportunity to choose between 1099 or W-2. At this point in time, there are currently only 10 states that do not allow loan officers to be paid via 1099, and those are Georgia, Kentucky, Illinois, Massachusetts, Nevada, New Jersey, North Carolina, Rhode Island, and Vermont. Regardless if you decide to go 1099 or W-2, NEXA treats all loan officers exactly the same, and that is as though they are running their own business. Therefore, you are responsible for your business expenses. We can't afford to pay your business expenses, especially if NEXA is compensating some of its loan officers at 100% of the margin. So the question becomes, what type of expenses should I anticipate? The good news is most of the expenses will be completely subjective to you and how you want to run your business. NEXA has one recurring monthly fee of $70, which is our technology fee, and this includes our LOS, lending pad, which is web-based with nothing to be downloaded on your computer, your email through Gmail, lender price, which is a full pricing engine, and a few other online items. You are responsible for your credit report fees. A lot of our loan officers simply have the borrower pay for their credit report up front. However, I personally don't do that. What I do instead for my borrowers is pull a single bureau soft pull. I get their real mortgage credit score, and it only costs $2 per borrower to do so. And based on the findings of this report, I will decide from there if a tri-merge hard pull is necessary. Any loans that close where you do disclose the credit report fee, you will get reimbursed for those fees. So only loans that don't get closed are the ones that you end up absorbing the cost. Any licensing, CE, continuing education, sponsorship costs, or NMLS fees are all paid by the loan officer. Any software, leads, employees, lease, or rent payments would all be your responsibility. But the great thing is we have a solution to help you pay for all these things with pre-tax dollars. For 1099 independent contractors, they simply get to write off expenses against their income. For our W-2 employees, in 2017, the IRS tax code changed where it became no longer possible for W-2 employees to get business tax deductions. This change led to employee business expenses now being 30 to 40% more expensive because they can only be paid with after-tax dollars versus pre-tax dollars. We solved this issue with our Divvy prepaid business card, and here's how it works. When you have a closing, you get paid on a per closing basis where you can designate if you want a certain dollar amount from that closing to go on that Divvy prepaid business card with your gross commission dollars. For example, let's say you have a $10,000 commission check. You can instruct the payroll team to take, for example, $1,000 of that $10,000 pre-tax and apply it to the Divvy card. And then you have $1,000 on that card to be used for example, your cell phone, your internet, your leads, your CRM, and any other software you use, a new computer, mortgage event, tickets to that event, including airfare to and from the event, hotel, Uber, or Lyft, but always keep your receipts. Now, with 1099, there are additional payroll taxes you will be responsible for and need to be aware of. You will handle those yourself with your accountant and the IRS directly, including all federal, state, and local taxes. In addition, you will have what are called self-employment taxes, and for 2023, they total 15.3%, which includes Social Security and Medicare taxes. A typical employee would pay half of these and their employer the other half. However, as a 1099 employee, you act as both the employee and the employer, and thus are responsible for covering the entire 15.3%, which is broken out as 12.4% for Social Security and 2.9% for Medicare. As a W-2 employee of NEXA, please be aware that although NEXA will cover the employer portion of the Social Security and Medicare taxes of 6.2% and 1.5% respectively, they do charge a W-2 employees a 12% admin fee. Next, we will briefly touch on sales and marketing. NEXA does have a sales and marketing team. It's called MLO Box, and they can do different things for you like creating email signatures, open house flyers, and realtor co-branding. They also can help with the development of your website at a discounted price. In addition, there are different training sessions hosted throughout the week that you can attend and invite your realtor partners to. We also have discounted vendors such as MBS Highway, Mortgage Coach, List Reports, and several different lead providers. There is also access to the marketing departments of each lender that we work with. You can use their systems to create marketing materials to generate more business for yourself. You might be wondering why they do this. The reason they do this is because you can grow your own business, then you'll be more likely to bring them business. We also have an internal Facebook page where all of the loan officers at NEXA are invited to join and can interact and ask each other questions and learn what new things are happening in the company with different loan programs, different lenders, and in the industry. Next is processing and underwriting. This is huge because if this area isn't strong, you won't be able to close your loans no matter how much business you are able to generate and bring in. So how does processing at NEXA work? Remember, this is your business, so you decide and have complete control over this. There are basically three ways. One, you can self-process some or all of your loans, but you can't charge a processing fee. Two, you can independently hire your own processors and pay them from your commission proceeds. Or three, what most of our loan officers do is utilize third-party processing companies. The great thing about option 3 is that the fee from a third-party processing company is paid at the time of closing by the borrower. If your loan doesn't close, that processor doesn't get paid. So basically, they're in the same boat as we are and are just as motivated to get that loan closed and funded. The great thing about this arrangement is that these processors are not automatically assigned to you. You get to choose them, interview them, make sure you are comfortable with them, and hire them on a per loan basis. The wonderful thing about this arrangement is if they perform well, you can continue using them on future loans. If they don't perform well, you essentially can fire them and never have to use them again. Here at NEXA, we have relationships with hundreds of processors. In particular, NEXA has a relationship with a company called SMP, or Secured Mortgage Processing. I personally use this company. Their processors are commission only. They are required to use their personal cell phones and take phone calls and emails from you, the borrower, and the realtors, and are available 7 days a week. They utilize a CRM system called Be in Touch, where they are required to keep your file updated at all times, giving you access to see where they are with all loan conditions. They are required to chase down every single one of these conditions. You also have direct access to their supervisor and can contact them at any time should there be any issue. The cost of processing at SMP is generally between $895 to $1,095. Again, this is paid for by the borrower and is listed as an expense on their closing disclosure. Next, let's discuss underwriting. Underwriters are employees of each of the lenders we use. There is a common myth in the mortgage industry that mortgage brokers lose control of their loans throughout the underwriting process. However, at NEXA, this is just a myth and is completely untrue. In fact, it's not uncommon for the underwriter to reach out directly to the loan officer to go over conditions once a loan is conditionally approved. With every lender we send loans to, we have what's called an account executive. It's the account executive's sole job to help the loan officer close loans with their company. These AEs are primarily compensated by the number of loans they are able to get their loan officers to bring in. So they are highly motivated to get the underwriters to work in our favor. With every lender, we get personal credentials to their system, just like someone who works directly for their company. Now, how much does underwriting cost? It's generally somewhere between $900 to $1,200 paid for by the borrower and is listed as an expense on the closing disclosure. I came from retail, and I am able to actually close loans faster on the broker side because of the direct access I have to these underwriters at each of my lenders. Next is support. Support is critical, especially if you are coming from the retail side to the broker side. And support only works if you actually utilize it. There are 3 things that will support you throughout your time at NEXA, and they are to be involved, to be engaged, and to ask questions. If you do these 3 things, you will thrive. However, please realize that it's going to take about 3 to 5 closings for things to actually click. So here's what we have for you as far as support goes. 1, direct access to the owners of the company. At any time, you can schedule on their calendar time to have a one-on-one discussion. We are a flat organizational structure, therefore it's simply the loan officers and then it's the owners of the company. There is no middle management at our company. And every Tuesday morning, there is a mandatory town hall meeting, which is typically 30 minutes or less. And then we also have a 24/7 Facebook community. Ask any question on any topic at any time, whether it's a loan scenario or info on a lead provider. However, our primary way of supporting you, especially when you first come on board, is through our full-time loan officer support team. If you decide to move forward with us, I can provide you a link to access this site immediately. You will see that access to loan officer support is 12 hours a day, Monday through Friday, and limited hours on Saturdays. They are here to help you. This system allows you to talk to them face-to-face through Zoom. In addition, if it is after hours, you can always click on their profile to get their personal contact information. Also, you can use them to refer a loan you get if it's in a state that you are not licensed in. They will handle the loan from start to finish, and you will get 25% of the total revenue simply by referring it. The last topic I have is benefits. Now, these are only eligible for our W-2 loan officers. If you are a 1099, you're not eligible for benefits. So we've got medical, dental, vision, and a 401k plan. There is no match on the 401k, and you are responsible for both the employee and the employer side of the health benefits. You are eligible the first of the month after your first 60 days. However, you must have at least 2 loans closed on average per month to qualify. The reason for this is we need to make sure that you have the revenue coming in order to pay for the benefits. Now, before I conclude this presentation, I'll answer some frequently asked questions we tend to get. The first is, when am I paid? Unlike a lot of retail lenders where you can be waiting 2 to 3 weeks to receive your paycheck after a loan funds, at NEXA, you can be paid within 24 to 48 hours of loan funding. However, this depends how the broker fee was paid to NEXA, as either a check that was mailed or wired. If the broker fee is wired, then you receive your funds much faster. Please note that NEXA does currently charge an $18 wire fee. It will also depend on how quickly you update your file for close in our LOS system, LendingPad. Next question, can I be licensed in multiple states? Yes, you can absolutely be licensed in multiple states. And NEXA does encourage it and has an entire licensing staff to assist you with this. When attempting to acquire new state licenses, it's always important to check that state's specific requirements before paying any fees to acquire the license. There are distance requirements and brick and mortar location requirements that some states have. Just remember that the fewer licenses you hold, the less opportunities in the market you will have. There are some states that will require a surety bond and E&O insurance as well. Remember, all of your licenses have to be updated on a yearly basis. So in year 2, you will have to do continuing education and will also be required to pay for all of your licensing renewal fees. However, we have a detailed database that can help you navigate any licensing concerns you may have. Next question. What if I have a loan in a state I'm not licensed in? You can always work to get a license in that state, or you can simply use our loanofficersupport.com channel to find NEXA loan officers who are licensed in your state and would be happy to handle the loan for you. You would receive a 25% referral fee. Next question. What if some states I'm licensed in don't allow 1099? If this is the case, then you must be a W-2 employee. Next, can I be both a realtor and a loan officer with NEXA? And the answer is yes, you absolutely can. NEXA does not have any restrictions on you using your real estate license. Next question. What is the processing and underwriting fee? This typically ranges from $895 to $1,095 for processing and $900 to $1,200 for underwriting, but could be more expensive if there are additional requirements on your file, such as whether there is down payment assistance involved, it's non-QM, or a rush is involved. Next question. I'm getting back into the business, or I'm new to the business. I haven't done many loans. Can I still join NEXA? And the answer is yes, you absolutely can. If you decide to join NEXA and you have less than 1 year experience as a mortgage loan originator, NEXA Academy offers expert-led training courses that allow new and returning loan officers to have an in-depth working knowledge of how to originate mortgage loans. The goal is to get you through the barrier of entry and provide you the latest mortgage industry best practices to be able to compete in today's competitive purchase marketplace. Last question. What if I have loans I want to get started before I make the move? We can definitely assist you with this. You can bring them to NEXA before your license is transferred, and we have a seamless system to help you track the progress of these files. And that concludes this presentation on why NEXA. My name is Stewart Brown, and if you have any additional questions, please feel free to contact me directly. As I mentioned at the beginning of this presentation, I'm available by phone and by text message at 215-317-6295 or by email at sbrownjr@nexamortgage.com. I can also be reached via website, which is www.stewartbrownjr.com, via the Book an Appointment button or my consultation link. I hope you found this presentation useful and educational. If you feel that after listening to this presentation that NEXA will be a good fit for you, then please reach out to me and I can help get you started on your journey with us. Once again, thank you for your time and good luck with your career aspirations.